Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, April 8th, 2014. On a side note, this is also a special report because we're going to expand on the current condition of the overall market. Today we had a follow through to the downside after Friday's very sharp reversal to the downside. Today we lost 22 handles on the ES, 38 handles on the Nasdaq futures, and the market internals were absolutely miserable, minus about 1,400 issues or more. Net advance declines on both sides. Trend being higher, and the VIX also racing higher a fair amount. But without further ado, let's move on and take a look at the pure price patterns, and then look at a couple of signals that have kind of put us on guard for this move. And makes this move to the downside no surprise to us here at Tradesight. First thing I want to talk about before we move on to the pure price charts is the ratio chart of the NDX versus the S&P. This is a ratio chart, which means it's a relative performance chart. So what happens is with this type of analysis, you know, the whatever security you're looking at is divided by the second security. So in a rising situation as we've had here in the ratio, that means the NDX was performing well versus the S&P. We started to find some real trouble here in early February, where we started to see the NDX start to underperform the S&P. This is trouble because the NDX, as we've been saying for a long time here, is a leading indicator. The NDX usually tends to revive the first after a bottom is formed, and it finds the resistance and rolls over first at tops. So we've had a lead here in the NDX with relative weakness versus the S&P here for quite some time, well more than a month. And you can see now that it's starting to get very, very pronounced here. We have a couple of levels here that we've been tracking. These are some key breakout levels in the bigger time frame. Let me shift up from the daily chart to the weekly time frame. You can see how we lost this key breakout level here, and we're starting to fall back down. We're actually at the lower half of this trend channel that's been in place. So we're really starting to lose relative strength here in the Nasdaq versus the S&P. Now here's just a pure price chart of the NDX futures. Had good relative strength. You can see the nice climb it made through this trend channel, broke out above it and sustained, holding above it here for all of these months, going on almost 2 quarters now. And now today we've closed fairly decisively back inside of this trend channel here, which is a real cause for concern. If we fall through to the downside and even take out Monday's low by 1 tick, we're probably going to wind up settling at least to the midpoint of this channel, and very possibly the lower boundary of this channel. All right, now we're going to switch up and move on to the ES futures. This represents the S&P 500, or the broad market. You can see that we do not have nearly the same amount of strength that we had in the NDX. The NQ futures broke out above their previous channel and made new highs, while the ES was contained by it. That's where the relative weakness in the broad market side comes from. It's been dragging and been unable to really punch out new highs, as the Nasdaq was pounding out new highs. So right now we've got a failure on this last high to even touch the trend channel to the upside. We're already back down to the midpoint of the channel. Let me highlight that for you. Now we've added the midpoint to the regression channel. You can see that we've dropped down already to the midpoint of the regression channel. This is a really important area. If we settle down below the midpoint here, as we did this last time, that really puts a touch of a lower boundary here at about 1775 or so in play, which is something that the bears are definitely looking for, and would also start to unleash all this energy that's been consolidating sideways here to the downside. That can make for some very profitable trades on the short side. So we'll be looking for continuations to the downside, not in just the ES futures, but in the market sensitive stocks as well. Now let's take a look at the ES futures. This is the ES futures with the Comer study on it. We don't often use the Comer study in the bigger time frames for the major futures. We use this generally more intraday, but we do monitor it because it definitely has value. I put out a special report on our YouTube channel at the time of this signal. We went 13 bars up here in the Comer study, indicating that we were at a potential inflection point, and not if at an inflection point, at least probably at the end of an impulse. Oftentimes, when you get an early signal here in the Comer, while we're waiting for one in the sister study, which is the Tradesight Seeker, oftentimes that is the end of an impulse. And we'll look at both studies here. Right now we're looking at the Comer, and we'll look at the sister study, the Seeker, in just a moment. But we got this 13 exhaustion warning here, and I did a special report on YouTube and talked about the implications that we're going to be going forward here from this exhaustion warning here from the Tradesight Comer, saying that it's really potentially time here to start thinking about not so much on the long side, not putting long money to work right now, and potentially start thinking about starting to lighten up and to think about some downside activity that could be forthcoming. What we did after the signal, though, was we essentially just went laterally and sideways. We went sideways here for a good deal, and a lot of traders everybody was still bullish up here. There's no question about that. The financial media has only gotten a little bit bearish as of today, after two very, very sharp down days. But we were definitely on warning from the Tradesight Comer here that put this exhaustion warning in place on the chart that is completely objective and has nothing to do with all the monkeys in the financial media and whatnot. But a couple key things here. We set this high water mark, which was the end of the initial impulse to the upside. We went sideways. The magenta line here at the top of the chart is the risk level. We went up to interact with that. Actually opened above it today, and Friday, and this was wholesalely rejected to the downside. This is Monday here, this candle here, and we follow through to the downside. So right now we're 2 days down, and we definitely have a price flip to the downside, and we have some real meaningful some price action. If we do take out the low here at about 1831, 1830, that's going to really put a lot of the technicians scrambling, and people are going to get bearish very, very quickly. All right, now here's a look at the ES futures. This is with the Tradesight Seeker study. This is our main study. This is the great thing about the Seeker is it allows for a retest, whereas the Tradesight Comer will generally find impulsive tops and lows. But the Seeker does a great job of letting the trend actually completely play out, and that's exactly what it did here. If you note here, up in the 7 and the 8, it's still fairly early in the count. We need 13 bars to reach that exhaustion point. When we got our 7 or 8 bars up here, that's where we got that signal in the Tradesight Comer saying that this is probably the end of the impulse to the upside. And if you look down here at the MACD, you can see that the MACD peak on this move was also coincident with where we got that signal from the Tradesight Comer that this was going to be the high. Fast forward to where we are now. We did this slugging sideways. We got our 9 up here, chopping back and forth in this trading range, and we got our 13 on Thursday, which was exactly on time. The 13 is your exhaustion signal, saying that now you really have to be on guard for a move to the downside. We already had our 13 in the Comer back here, which indicated the high of the impulse, which was right on time. The MACD peaked out, and the whole time that the market was trying to put in this exhaustion, we actually have the MACD sloping to the downside. So the market's losing momentum right now. 13 exhaustion is in place. Friday they tried to gap it up, and the market just got slaughtered. This is a classic outside day down. The day after getting the 13 exhaustion warning to the downside. The volume wasn't anything particularly special on Friday, which was the non-farm number. A lot of times you need to kind of digest that number, and then the follow-through really comes after that. And certainly on Monday we had follow-through and notice the pickup in volume. This is the most aggressive selling that we've seen since the low back in very, very early February. So right now we're sitting at a key area here. We came down to the 50 DMA. We touched that today. The 50 DMA tends to get gamed to a degree, but we're only 2 days down now. So we could see one more day and actually see it slice through that tomorrow, which is a possibility. After 3 days down, Look for a little bit of a buffering and perhaps circling of the wagons. But now, right here where my cursor is, this is going to be the line in the sand. That's going to take us down below the 50 DMA, so this 1832, 1831 level is really, really important. If we lose that, especially on a closing basis, that is going to roll the momentum to the downside and probably get some folks very concerned here and set up some nice shorts. So we're going to be looking for continuation shorts to the downside and not passing on anything that triggers. The other key thing that we've been looking at is the cumulative advanced declines, and they've been fairly good on the New York Stock Exchange side, which basically mirrors the broad market in the S&P. That's the upper chart here. We have made new highs and started to see a little resistance popping up here with some pullbacks and then an impulse to the upside. But the real action and the thing that we've been focusing on was the Nasdaq side. That's the lower chart here. We have a qualified lower high here. We have this high. We had this impulse to the downside. We had this retest of the high, which didn't quite make the high, which was the lower high. And then once we undercut this previous low right here, that was our qualified lower high. So this chart is definitely turning to the downside. We noted this while this was happening, and telegraphed and communicated that this is going to be trouble for the Nasdaq. And when we say that this is and what I said at the time was this was a cause for concern, and when I don't toss that around very lightly. So when I say this is a cause for concern, that really means you need to be on guard, especially since the Nasdaq side of the market tends to lead the broad market side. So we clearly have Nasdaq rolling over in price. We've got confirmation and a lead here from the actual price action in the cumulative advanced decline line. All right, so moving on to a longer-term weekly chart of the cumulative advanced declines. Up top here we have the New York Stock Exchange side. You can see that we're still holding a positive trend here. We still have a ways to go before we violate the low here of this trend line. So that's still positive for now. But as we said before, the broad market side tends to lag Nasdaq. If you look to the lower chart here, this is the Nasdaq side. You can see that this long-term trend line here, this is going back, 3 quarters now, has been broken and violated on a weekly basis. So this is a pretty important technical development here. And the one thing that you don't want to argue with in the market is the status of the cumulative advanced decline line. The one that's really important is actually the New York Stock Exchange side. Once that goes, the whole market goes no matter what. But right now, the condition that we have is we have a lead here on the Nasdaq side breaking lower, and if the New York Stock Exchange follows through, which it usually does, that'll be the ultimate confirmation that we have turned to the downside here, and that we're actually not going to have just a pullback here, but we're going to have an actual full-blown correction in the market. So a couple things to be aware of. Don't really think it's worth talking about a lot of the individual sectors and whatnot today because I think the macro view is much more important tonight. The one chart I want to leave you with is the 10-day trend, which is really the ultimate short-term overbought and oversold metric. And right now we're at 1.07, which is really pretty much dead neutral. When we get up to 1.35, that means we've got a short-term oversold condition. 0.85 is the overbought condition, and we've got a little bit of an upward bias here, but we've got a lot of room to go before we get close to a short-term oversold condition here in the market. So a couple things to think about, folks. Just be ready to play both sides, but make sure you don't pass on short setups, and especially continuations to the downside. Make sure you're looking over the 52-week low list for continuations to the downside. We had a nice short today in XONE, which is already down a ton, but we got a very clean trigger and made a really nice trade there today intraday. And so just keep on top of those. Those opportunities are going to be out there, and make sure you're profiting from them. All right, so that's it for tonight. As always, thanks for listening. This has been Rich for Tradesight.